Welcome to Trading Lounge and the Bitcoin report for Wednesday, October the 20th, and just starting on the daily chart here, and then I'm going to cut straight through to the tick chart because I just really want to focus in on this area through here. So as it stands at the moment, we've got wave 4 here with wave 1 here and wave 2 here. And the extension, the Fibonacci extension, taking the length of wave 1 here and adding 61.8 to it, and then putting that from the low of wave 2 here, gives us a target up here closer towards the 80 for wave 3. So that's the way that I'm going. It is possible that we could look at this as wave 1 to the upside there, but it's a little bit extreme at this point, but I just wanted to note that there. The second thing here is that from wave 2 here, we can look at wave 1 and 2 and 3 and 4 and 5 taking us up here somewhat. Okay, so what we're looking for here at the medium level here, the 65,000, is a classic trading levels pattern. So I'll just put this up here. So if this is the 65,000 across here, we'll have the arrival, the reaction, the first high above the level, and then we'll have this correction here. So really it's just the way that the market migrates from being resistance to support at certain price levels. So we've either got this here or we've got a version of that which would look like this, where it doesn't come back below the level, which is possible the way that the market is trending, because the way that I can count this to the upside, this move up through here, yes, it could just continue to go. It might have a smaller correction. I was looking for a correction probably a little bit bigger than what we've got in wave 2 here for that, but because it's strong and we've got the news of the ETFs that are not really displaying the volume, as I mentioned the other day, that could be already priced in. That could be the ETF Bitcoin. I mean, I'm not talking about the paper Bitcoins, the futures. I'm talking about, you know, purchasing approvals with purchase of Bitcoin. So either way, the bottom line is that we're going to see some sort of little dance across the 65, and then we're going to see it push up higher. So yeah, we can talk about those levels, but yes, I just really want to talk about this in here today. So on the 100 tick chart, let's just get in a bit more data. Maybe 50 will take us to the bottom. Not quite. Does it matter? Doesn't really matter. It's just this section here. So we've been considering this top over here of 5 of 5 of 5 of 3, and then an ABC for wave 4, and then we'll be looking up at well, we're not going for wave 1 at the moment. That's a little bit ambitious, but I will keep it there. I don't think it's the case, but 1, 2, 3 there. So just going to the conservative view first, you know. We'll just dull that out while I'm here. Don't want to get folks too excited. And this one over here, we'll need to put that as wave 4 as well. So anyway, besides all of that, we'll put that down. Let's put it down here, and we'll just get these out of the way as well. So it's not the midpoint. Let's not group. Or it's sort of not group 1 really there either. This 65 is a medium level, so let's just get that in there, and we can talk about the other levels to the upside. So with the levels to the upside here, that's kind of important. 70 is important. My main level up here is 72. Okay, so with that in mind, I'm just going to pop that in red. Always ever the designer. So yeah, look, there's lots of important numbers here, but normally when I'm talking about the markets, I'm talking 65, 72 and 80. That's my sort of shell. Now I know that 70 is important, and it will be important. I know that 68 will be important. I know 66.50 will be important as well. So there's some, we'll get into all of those, we'll go there. But what I wanted to talk about today is really just the wave structure from where we are at the moment. So from wave 4 here, we'd been looking, we counted up for wave 1 the other day, and then back for wave 2. Okay, so I'll just put 4 over in the corner there. So we've got wave 1 here with an ABC for wave 2, which we've done, and then we had wave 1 and 2, and yesterday I think we could have been in here somewhere. So I'm looking at wave 1 here, but I could put, probably better off putting wave 1 over here, just on hindsight looking, which would be 1, 2, 3, 4 and 5. Bit dodgy, but you're with the dodgy brothers at the moment, so you've made your bed. Live and die in our lanes and that sort of stuff. So 1 and 2 and 1 and 2, and then this third wave up here, and then we'll have a fourth wave here. We don't need that fourth wave. And then we'll have the fifth wave of the third, and then the fourth here, and then we'll have the fifth of the third, and then we'll have the fourth here. That'll just drop that back below the level a little bit, just to give you a bit of an idea of the skeleton of this particular move here. So we could end up anywhere up at 68 and 70 for this here, but we'll just see how, once the market gets above the 65, I will see how the market's going. If it's really sluggishly moving up and, you know, really I can see that there's pressure under it, well then we'll be able to pick a top and we'll look at the structure and so on. But it's powering at the moment. It's in 1 and 2, 1 and 2, 1. So it's in the third of the third of the third here. So we're going to see, you know, we'll probably be up here at the 68, and it may hit 68 and then drop or something. But yeah, we'll talk about that further. But look, there's nothing to be concerned about. If you're long, that's fantastic. If you're just in the market, it's fantastic. You know, I hope there's plenty of hodlers in there. Just adding dollar cost averaging is the best strategy that I could say to new traders. Or if you can't navigate a market, which is harder to do, I'm quite a good analyst and trader, but I find it difficult to do a lot of things as well. So don't put too much pressure under yourself. It's like everything, you have to do your apprenticeship in it, you know. You just can't come in, you can't be a doctor or lawyer or an engineer. A lot of engineers come into the market, and because they're number people and intelligent people, they, you know, and they've always been the boss, they think they're the boss and they can like understand things and do things, but they learn pretty quickly that the market's the boss and they have to take their place, and you need to be humble, and you need to be a lot of things really you just have to do your time. We're all different, but whatever way it is, you still have to do your time. So yeah, look, nothing to worry about. Everything's pretty chirpy here for this you know, for this run here. And I think that once the correction, you know, if there's going to be a correction here, which will be something like this. But, you know, the problem is that we've got the news of the ETFs here. So we could just, you know, continue to plow up through here. But, you know, the old high, we're approaching the old high here. Another couple of hundred points. What was it? Something like 64,863 or 5 or something. But yeah, anyway, there we go. I mean, once it finishes, it gets to the old high here, it's like a psychological finishing line, isn't it? I can see that it's going to blast through that, and then everybody will go, yeah, we passed it, and then we'll correct, you know. Anyway, we'll see. I'm going to leave it at that. I'll just have a quick look at Ethereum. So wave 3 and 4 here, just on the same thing, so on an hourly chart here, but I'll just shapen this up a little bit for us. 3 and 4 here, 1 and 2 here, so we need to come up for wave 3, 4 and 5. So we'll be up in group 1 here. This market's not moving as quickly as the other market. But yeah, we still need to, you know, we still got this to plow through there. Well, let's going to follow that. That's the line. So that's the swing range here. So we've got group 1 above and group 2 below. So yeah, we'll come up here somewhere. Okay, well, I'll just leave it all at that. Just wanted to keep it really simple. Okay, cheers.